Welcome back to the Smash Property Podcast, and happy freaking New Year to everybody out there. It is now 2025. I hope you all had a great Christmas break, a great New Year's with your friends and family. Welcome back to the Smash Property Podcast, and welcome to Akira, my co-host, sitting in the hot seat today. How you doing?
I'm doing great. I just came back from an amazing road trip with you. Traveled all through to Benalla, Victoria.
Yes.
The high country.
The Victorian high country, yes.
Oh, it was stunning.
It's awesome, man.
Yeah, I feel like that's a part of the world. If you're a local there, oh my goodness, it's very special.
It is.
So we went there. Then we went to Lake Entrance.
Lake's Entrance on the east coast of Victoria, yes.
And then Canberra.
Canberra, yeah.
What did you think of Canberra?
I love Canberra.
You do?
Yeah, super underrated city. I think people are great. The food's
Food was
great.
stunning.
It's not that busy, so great time.
Yeah, I like traveling when there's no one there. I don't know if this is normal. I think I'm getting old.
Yeah, the crowds are never a great thing.
Yeah, we went to the fireworks, just rocked up, went.
No hassle, no traffic. We just walked, super cool.
Super chill, super fun.
Yeah.
Yeah.
And now we're into it in 2025. The episode we're going to go through today is how to rationalize your fears of getting into the property game. We're fortunate enough that we've spoken with tons of investors over the course of the year doing business with people and hearing firsthand people's fears about getting into the market, some hesitation, some reservations, all sorts of things. You and I have obviously been in the game, that is the property game, for a bit of time in scaling up our own portfolio and have had to overcome a lot of the fears that we're going to go through today. So the idea behind this is really just to, if you're out there, it's now 2025, you may have set yourself, a resolution or a goal to get into the property game in 2025, or maybe you want to scale up and you're a bit hesitant in scaling up your portfolio. We're going to go through some of the fears that are quite normal, and just to help you kind of normalize that, hey, that thing you've got going on in your head, that's normal. Everyone's kind of human here, at least from what we know.
No aliens.
No aliens. But it's totally normal to have these fears. We're going to go through some things that you can do to either completely eliminate the fear if it's irrational, or help you kind of navigate the risk and maybe some ways you can kind of minimize the chances of the thing, whatever the fear is, coming into reality.
I think that's a great way to put it. With property investing, if you're new to it, I think the scary thing is the unknown. And so your head just comes up with 1,000 reasons not to do it.
Yeah.
So I think with what we want to do today is really go through these things, because you and I have faced them ourselves in our journey.
Yeah.
And I think it's important to, work through them and think about the flip side of once you do work through it.
Yeah, 100%. And I just, before we kick into it, just want to use this analogy, the skydiving
we
analogy.
were in the car road tripping and you
that
came
I was
down
talking
with this.
about. And it's basically, if you've never skydived before, you are going to have so many fears about jumping out of the plane, the parachute, not working, and so many things that can potentially go wrong because you've never done it before. And that's totally cool, because that's just a human reaction to having not done something before. But if you've done one jump, right, your second jump, you're going to be nervous, you're going to have all those things, but a lot of those irrational fears are going to be gone. Why? Because you've gone and done it, you've experienced it. Now, it's the same sort of thing in the property game, right? If you've never bought a property before, you are going to have all of these irrational, illogical fears that creep into your mind, which is totally normal. But you'll soon realize once you get 1 and 2 and 3 properties, a lot of these fears are really just our own brain just getting in the way about ourselves. So I just wanted to kind of use that, because it's kind of it's a good kind of way to go, okay, well, in the property space, there's going to be some, just like skydiving, many things that can go wrong, but not many of them actually come into fruition in your journey. So
I think, to your point, the actual instructor, the person who does it the most, doesn't feel those fears the same way, because they're so it's normalized, they're used to it. So this is just an everything.
So we're kind of like the skydiving instructors. We've bought tons of property every single month for a very long time, and we're going to try and help some of you guys take the leap, jump out of the plane, And hopefully in 2025, you can get yourself a property or two or three or more. So let's get into it.
100%. So I think, when we were talking about this, the first one that came up and that continuously comes up when I speak to new investors is, what if the price drops on the property I buy?
Yeah.
What would you say to that, the rationalizing of that fear? Because it's a very real thing that can happen. I know it has happened to a few people who have invested that I've spoken to. They've bought a high-rise apartment in Melbourne a couple of years ago and it's just dropped or not even budged.
Yep.
That's shit.
Yeah.
Like, there's no other way to say it.
It's a hard thing. Yeah.
So what can you do to eliminate that or work through that?
Yeah. I think it's a great place to start because it's just the very normal thing for everyone, right? So to your point, prices do drop, right? Prices do stagnate, and sometimes for a very, very long time. So the key here is to actually buying in the right market at the right time, and doing your research and analysis to know which markets to buy in at which times, or using somebody like a buyer's agent to actually do that for you, right? So the fear is a very realistic one, but if you're buying the right property at the right time in the right market, I'd say that fear can be completely eliminated in 99% of cases, right?
Yeah.
Now, my thing with buying property is I always want to buy houses if I can, on big blocks of land, ideally in a capital city location. Now, obviously, budget is going to be a limiting factor there for some people. So if I can't do that, then I'm looking at houses in big regional locations on big blocks of land. And if I can't do that, then I'm looking at, townhouses or apartments in capital city locations where possible. And following that kind of rhythm, you should really eliminate a lot of the chances of you actually buying a property and losing money on it. Now, I will say, and I've mentioned this in another potty, if by chance you do all of those things, like, I bought a house in Sydney and the prices dropped not long after I bought it, the reality is you just don't sell the property, right? Don't panic. Don't, run to get out of the market, because that's when you'll realize the actual loss once you sell. So if you can, hold on to the property, wait for the market to do its thing, and then, it'll pass eventually if you've bought in the right market.
Yeah, very well said. I think it's a long-term play. It's not a short-term play.
Absolutely.
So I think with property, different to ETFs and things like that, you really got to understand, the market that you're getting into and your actual goal. We say this all the time. Like, what is the intention behind what you're doing?
Exactly.
And if you buy with purpose, that whole aspect of prices dropping is going to be eliminated.
I love that.
The reason why.
Buying with purpose. That's a nice little saying. It's got a ring to it.
Oh,
buying with purpose. Yeah, we'll put that
Static
somewhere.
Yeah. I think another one that often comes up is, of course, interest rates, especially with new investors. It's obviously at a higher than usual point right now. What would you really say to that in terms of, the property investing journey and how to really rationalize and understand that?
Yeah, I think, and again, another very normal fear to have. I mean, interest rates are a cost of doing business in property. No one can ever predict as to, what's going to happen with these interest rates, to next week, next year, next 10 years. The reality is that it's going to move, and it's going to move, at very unpredictable times. So with that in mind, I always look at it and go, okay, well, it is a cost of doing business. As we've just seen in the last sort of year or two with this interest rates cycle that we've gone through, is that interest rates go up in most markets, so do the rents as well. They're not long behind it. Now, for me personally, I've been heavily leveraged, into the last couple of years with my own property portfolio. And yeah, I was very fearful about, hey, if these interest rates keep going up, I'm going to be absolutely screwed here. But the reality is that once the, lease renewals come up on the properties, the rents have gone up to whatever the market rent is in the area, which has generally been higher than what the previous rent was. So that risk of you not being able to afford the property is mitigated by the fact that your the rents for the particular properties that you have are most likely, depending on the area, are going to follow in terms of rising as well. Now, this is, again, where about buying in the right market is going to help you have a bit of a buffer there when it comes to these interest rate cycles. Now, I will say, as interest rates go up, rents go up with it. But tell me where you have seen in any capital city or big regional locations where rent actually come back down when interest rates come back down. So what I'm saying here is that interest rates will, if they continue to go up, let's say they hit a peak and they start to come back down. A lot of analysts reckon that might happen next year. If that were to happen, you're now going to have this cash flow, I would say surplus in most circumstances, where the current rents are and the gap in the interest rate actually is. So in my view, and one of my mentors has said, it's about preparing for interest rates to rise at any time, but knowing that it is going to be a temporary situation, in that it might continue to rise, absolutely, but most likely the rents will continue to follow up to a certain point, obviously. But there's a very good chance that the rates actually come back down, and your rent is going to stay at where it currently is, and you're going to pocket the difference. So just about holding through that cycle. Now, one of the tips that I'd give to investors out there looking to get into property and wanting to mitigate that risk, what I've always done is just put a 2 or 3% buffer on top of what you're currently already getting, right? So when I was buying property and the interest rates were, around the 4% mark, I was preparing for them to be around the 6% mark or 7% mark, which they're kind of at that point now, right? So just add another 2 or 3% on top of what you currently got, just to give yourself a bit of a buffer, work out all the numbers and see if that's something that you can actually stomach based on your current cash flow position. And you kind of know rationally what it actually looks like, and you'll be able to tell yourself, can you afford it, yes or no, and get into the market. Okay, so a couple of the big fears we've got out of the way. Now, one of the other big fears that people have is essentially buying in the wrong area. Now, as I've just mentioned, buying in the right area is very important. So this is a very real fear for many, many people. So tell us what people can do to make sure that they are buying in the right area, or more get over that fear of buying in the wrong area.
Definitely. So I think it comes down to understanding the data within different regions and areas and cities. First, you've got to understand your budget, most importantly, and then make sure you know what the markers are in terms of what to look for in the specific location. What are the vacancy rates? What is the demand in the area? What is the economy doing? What is the infrastructure in that area? All those types of things are just some of a few indicators of what you can look for to make sure you're buying in the right area. And then, very simply put, if you don't know what to look for, outsource it to someone who will know. I think that's the simplest way to get over that fear and get around it, because there's a lot of hot spots that come up every day of the week. You see them when you're scrolling on Facebook. But most of the time, those hot spots are long gone and past by the time you are actually going to get into the market. So really making sure that, your due diligence is there when you're researching, or if you are not able to do it, outsource it to someone who you trust and is able to guide you along that path as well.
I think you said it pretty good there that, if you're looking to buy in a hot spot, it's already too late, really. You want to buy there while it's a cold spot, and then it wants to turn into a hot spot. So no, I think, very well put. If you're a DIY property investor, there's a bit of research that you got to do to really know that an area is good or not. And there's tons of data out there we've spoke about on previous poddies. Or if you just don't have the time, or you're not confident in doing it yourself, just outsource it. I think you
have a beautiful saying of go where everyone isn't.
Go where everyone isn't. That is a Nick V quote.
Yeah, I like that one.
I like a lot as well.
And then another one that has often come up when I've spoken to people is the vacancy rates with tenancy. It is scary that if you do buy a property, you can't find a tenant to put in there.
This was a big one for me in the beginning too.
Yeah?
Yeah.
That's interesting. So what did you feel when you were going through that?
Just like, fuck, if there's no tenant in there, like I'm going to be up for, the mortgage of my own home plus the mortgage of another home, not getting any income plus all the expenses. Like that was probably one of my biggest fears.
It's a big strain.
Big strain. Now, what you can do as an investor out there is looking at the vacancy rate, every area is going to have a vacancy rate now, depending on where you get your data from, depends on how accurate that vacancy rate is. But for example, you know, most of my houses are located in Queensland. Most, you know, a lot in Brisbane, a few in regional locations. I've had them for years now. I have never, touch wood, never had an issue, except for that one with Kalanga, that story that I shared on that potty where I had a squatter move in.
But this is the property manager side of it.
But that was done and dusted in like a week, 2 weeks, and I had no issue with that. But aside from that, I've never had an issue with, you know, a vacancy period. Now, obviously, Brisbane's been in very high demand. You know, that the supply and demand of the Brisbane area itself has been very strong.
Yes.
As has a lot of the regional locations we bought as well. So to your point earlier, it's looking at, you know, the population movements in the area. You know, is there a lot of stock on the market for people to actually go and rent and live in, or is there not? And that will give you a good idea of, hey, if you buy this property, can you put a tenant in there from day one?
Agree. And I think it comes down as well to having a good property manager. I know we say this all the time.
Yeah, but it's so true.
Having the ability to forecast and know if something's going to happen or where the tenant might be moving out, to have like a small gap between that period from first tenant to second tenant, I think is really important, and having a property manager who's on the ball so that gap is as small as possible, so that you are able to, you know, not be in a deficit for too long. Yeah.
We say it all the time. The property managers are the goats of the real estate industry, at least in my perspective. So if you find a good one, look after them. Yeah. And don't skimp on, you know, just getting a cheap property manager because you're trying to save a couple of points on the fee.
And that will help you through that fear of vacancy rates, is obviously having someone you trust on the ground who's looking after the property, who knows what's going on. That will allow you to get over that fear very, very quickly. I think another one that comes up is being ripped off.
Yes.
Nobody likes being ripped off.
No one likes getting ripped off.
What would you say to that in terms of, you know, when you're purchasing a property, how do you not get ripped off?
Yeah. It's, I would say, very difficult to get ripped off in real estate. Again, if you're buying in the right areas, because if you're buying in the right areas, property's going to increase in value regardless of what you pay. Now, I think this is a very like a rookie fear of overpaying for a property. So I'd say some of the things that you can do, and what I like to do is really just look at comparable sales in the area that you're looking to buy. Yeah. Now, comparable sale, in my view, really has to be ideally within a month of you looking, maximum 3 months back in time. 6 months or more is just too far long ago to be looking at comparable sales. So you want to look at recent comparable sales, similar configuration, you know, same size block of land, you know, similar fit out. Has it been renovated? Are you looking at a renovated property? Those sorts of things, so that when you're crafting your offer, you're putting an offer forward that is competitive enough to get the seller's attention, but not too competitive that you overpay for the property. Because the reality is, and I've said it in another potty, you don't want to be a low baller because you're just not going to get anywhere doing that. But you want to get into the market, in my view, as quick as you can. So the comparable sales is going to help you the most to really get a gauge on what's happening in the market. However, even comparable sales in some hot markets are just outdated. Like, you know, what they were selling for a month ago is not what they're selling for now. So take it with a grain of salt and look at, you know, the market conditions, etc. But if you are really worried about overpaying, and that's a big fear, and you feel like you don't have the tools to be able to do that, again, like you've said before, outsource it to a buyer's agent that is going to actually help you buy at the right price in the right market, so that you don't get ripped off.
100%. Exactly. I think it's as simple as that. You know, being ripped off is a fear, and I get it, but there is genuinely legitimate ways to overcome that with very simple things that you can do.
There is. And look, you know, a lot of the professional property investors that I've spoken to, myself included, like, I'm happy to actually overpay for a property if it means that I'm getting it now. And I've done enough analysis to know where the market is going to go to. I'm happy to pay 5, 10, sometimes 20 grand over
to share that story. To get it. Exactly. I mean, we did do that recently, I think this year, in regards to one of the properties we purchased, because we were
last year.
Oh yeah, it's 2025.
Gotcha.
I'm gonna have to remember that now. But yeah, I think because we had a time constraint, we were really conscious that, okay, we want to get into the market. I was feeling some type of way, we overpaid this, that.
Yeah.
But literally 2 months later, we saw that thing go up by 15K.
Yeah.
So
it's just past what we'd paid for it. So
exactly.
I do not recommend that for first-time property investors. No. Or really at any time, but like in our circumstance, there was a bit of time pressure. We had to get certain things done, and it was like, fuck, just overpay, get it done. And
it was a quality asset, and we knew the risks involved of what we were doing.
So comparable sales or outsource.
Yeah, definitely. The other one that comes up, and this is a genuine fear, and I can really understand where people come from with this one, is unforeseen expenses.
Yeah.
It's one of those things with property investing. There is a whole load of things that can go wrong. There's a load of things that can go right too.
Yeah.
Often you have dishwashers going, air conditioners going, you got to fix some carpet, some roof tiles. And those are expenses that you might not have in your kitty or your budget or have planned for.
Yep.
So what would you really do to make sure with that specific fear, you put yourself in a position where you can write it off?
Yeah, look, nothing particularly groundbreaking. The first thing is that, know what's going to happen and have some kind of emergency cash ready to go. I would also say that in almost every single circumstance where I've had, a maintenance item to come up, it's just come out of the rent. So I haven't actually been physically out of pocket. Yes, I'm not collecting the same rent the next month, but it's not like I've got to go and search for the cash somewhere to go and pay it. The property manager just deducts it from the next month's rent, which is, in my view, okay.
It's super easy. I think the only other thing I would do is make sure your building and pest inspection report, you go through it properly so that you know what to expect.
You know what's coming up.
What type of property it is, and, if it's super old, you've got to be aware of some of the maintenance.
It's gonna happen at some point. You're gonna have a hot water heater blow and a dishwasher go and all sorts of stuff.
And to be fair, that's whether it's new or old.
New or old, it doesn't matter. But I also will remind you guys that the maintenance items on your property, whether new or old, are a tax deduction, right? So, all the expenses related to your property. Now, this is not any, taxation advice. I'm not an accountant, but I'm a property investor who has had lots of deductions over the years. They do work into your favor in reducing your taxable income, in the financial year. So, not ideal. Obviously, if you can avoid maintenance costs, yes, cool, fine. But just don't sort of feel like, I'm completely out of pocket. There is a bit of a saving grace in that tax deductions that you'll get out of it. So
glass half full.
Glass half full. Yeah, love that.
I think another one, just moving this along, is, of course, lifestyle impacts. With property, I think it's at the starting phase because, with rates being higher than usual, you can feel like, oh, shit, I'm going to be out of pocket a couple of grand every year. For most investors, that could deter them off doing it because they're like, well, I can't see the benefit right now. What's the point?
Yeah.
What's your perspective?
Look, I mean, it's a real thing, and you may have to sacrifice some things in your life to actually get a property. But you got to ask yourself the question: are you happy with the current lifestyle that you've got and the current income and the level of wealth that you have? If the answer is yes, then hey, just keep doing what you're doing. But if the answer is no, and you want to better your position, then hey, you might have to sacrifice some stuff in your lifestyle so that you can get that property, so that in 5, 10, 20, 30 years, you can actually reap the rewards exponentially more wealth than what you have currently. Yeah. So ask yourself that question first. Now, in terms of the reality, hey, yeah, I've actually decided to buy, and there is a bit of an impact to my lifestyle. You might have to, look at your expenses. Like I said, I think before you buy the property, understand what the cash flow looks like. Like we always say, do that planning, do that projection before you buy. So hey, this is going to be, $5,000 a year out of pocket. So you're prepared for it, right? And it's not a surprise or a shock to your system when you actually go ahead and do it. Yeah. And if you've actually bought a property already and it is impacting your lifestyle slightly, Like I said, you might have to prioritize some things and maybe shuffle some things around so that you can actually continue to hold the property. Because if you've got the right property in the right location, it is going to benefit you exponentially more than what you actually realize, and exponentially more than what it's actually costing you to hold it now. So look at that, work out, what you can shuffle around if you can. Take it from there.
I agree with you 100%. I think, we coined this term, the risk of not investing is greater than the risk of investing.
Oh, yes.
From my perspective, when I started, it made me shit scared to know that I was going to be out of pocket. But you soon realize, especially now being in it for quite a while longer, I see the reward of doing it. So I would say that specific fear is the only way to get over it is buy the right properties and make sure you do your research. If you're able to do that, that fear will eliminate because the reward compounds so much once you understand what you're doing and how you're doing it in terms of buying the right property and scaling your portfolio.
Yeah, well said. I mean, the reality is that one property for most people is life-changing money. Like for the average person out there, having one property and holding that for 5 or 10 years is going to change your lifestyle significantly, or it's going to allow you so much more options and choice in your life. But having like a property portfolio of like multiple properties, it's a game changer. And honestly, I was thinking, while we were traveling on the road trip, I was like, I can't understand why more people just don't get into the property space themselves. I mean, it is a very popular thing here in Australia. But I'm like, I want everyone to do it because it's so great. Yeah. The benefits you get out of it. So much greater than all these fears that we're talking about here. So,
oh my God, totally. And I think the other thing is with property investing, it's a lifestyle.
Yeah.
Once you start doing it, I think you start enjoying it more and more. And even if you are outsourcing it, because you see the benefits of it, it becomes addictive. And I think you realize the growth and the compounding of it.
Yeah.
And I mean, for me, it significantly changed my lifestyle.
Yeah.
And genuinely, it's one of those things, I didn't do it and sat on the sidelines, I'd be kicking myself.
Yeah, so, well, you wouldn't know. But the fact that we know, it's kind of like, this is the reason why I at least for me, I do this potty and have this business is to really like help educate people. Like, hey, just get in, do it. Like, don't wait. So.
It is going to be a short-term cost for a period of time whilst you're growing your portfolio. But I think the flip side of that is rates are going to decrease at some point. Rents are going to go up. So you've got to be able to know, short-term sacrifice for long-term gains.
Yeah, and I think just following on from that is the longer you hold the property, over 5, 10 plus years, the better the cash flow is going to be over that time period. So what is negatively geared today is not going to be negatively geared in the future. And that's just what you were saying in summary. So again, knowing that and going, okay, so for the first maybe 5 years, the property's negatively geared. And this, you're going to have to forecast this yourself. We've got lots of tools that can help. But knowing that, okay, after the 7th year, that's when it actually flips and it's positively geared. Not only that, all the equity they've built in that 7-year period is just, more money than I could have actually earned working a frigging job.
Yeah.
So putting that in perspective, to your point, I think is critical.
And this is why I say if you get in early and while you're young, you have the ability to have that 30-year loan term paid
100%.
off so much sooner. So by the time you get to your 50s, 60s, oh my God.
100%. I spoke to a 19-year-old, I think just before Chrissy. He might be watching this. He had, I think, 20K saved up. And I was like, bro, you are so close. Just get a couple more, get it, to maybe about 50K. We'll get you into the market. That kid's 19 years old. By the time he's 29, he's going to be, fucking wealthy beyond belief. So if you're out there, you're young, get into it. Don't wait. And let's move on to the next one.
Let's go. Tenant damage.
Tenant damage.
This is a funny one.
A reasonable fear. I think, this is what insurance is for the most part. You get your landlord insurance to protect you from the chance of your tenant damaging your property. So that's probably the first thing to get out of the way, right? Like your landlord insurance, if you've got the right insurance, is going to protect you in that instance, number one. Number two is having the right property manager to vet the tenant to make sure that, hey, if they've rented previously, they've paid on time. Have they had any other, charges and, the tribunal hearings or anything like that. Are they a good person? Yes or no? You want your property manager to be telling you that, and that's where having a good property manager with a good vetting process is going to actually help you in that scenario. So
let's tick that off. You summarize that.
Tick
really
that
well.
off. Get your insurance. Get a good PM, and you won't have any issues with your tenants. Also, I think not only that, but maybe the third one is be a good landlord. So when maintenance items come up, like if a dishwasher, right? Like, yeah, it might be $500 expense or whatever. But imagine you were out without a dishwasher for a week or two. Like, that would just be annoying, right? Or say the aircon's gone in the middle of summer. Replace that fucking thing as soon as you can, all right? Your tenants, you're in business, a partnership with your tenant, right? They're paying most of your mortgage off. And when things go wrong, fix it so they have a nice place to live. And I'm telling you that good spirited energy will come back to you tenfold. So look after them. All right.
I agree.
Now the next one is, we hear this quite a lot, is, I don't want to buy into state because I'm not there. I can't see the property. I can't manage it. I can't go and inspect it. A lot of people have this fear and it really limits the areas that they can buy dramatically. But tell us what people can do to kind of move past that.
Well, I like to ask the question, why? Why do you actually need to see it? What is it about looking at it is going to change your mind about buying it? Because one, for the most part, if you're getting a building and pest inspection done, the structural aspect and the actual building itself, you have a full report, full analysis of that specific property. So there's nothing that a professional won't be able to tell you from looking at it.
Yep.
So with buying into state, I think it's important to know that it gives you more opportunities and the ability to, push your money further and get more value for money. So with knowing why you actually want to see it, that's the first thing I would ask myself. Because I think at the end of the day, if you're not a professional and you don't know what to actually look for, what is it about looking at the property that's going to make you feel any better? Exactly.
What are you going to see in person that you can't see in a video, for example? And unless you're a builder and a qualified one at that, were you going to go and look at it and know that the structure's good? Probably not for most people, right? So to your point, getting that a building and pest inspection done by a registered builder is going to eliminate that fear of needing to touch and feel the property.
Sorry to cut you off. I think the only other thing I would say is get your property manager or a property manager to have a little look through and a walk through. They will be able to, if your fear is maybe it's not such a good street or area, Google Maps, or your property manager drives by, has a look at the property on your behalf. That way you get a bit of confidence and clarity because they're going to be working on your best interest.
Almost every single investor that has a double-digit portfolio has not seen most of the properties that they've bought, myself included, until we did a road trip recently to go and just drive past them and just have a look and see the area. So it's it is a very, very limiting factor if you need to see the property. But to your point, ask yourself, what are you going to do? Like, what are you going to do when you go and see the property?
You're not living there. Your tenant's living there.
Exactly. And I'm pretty sure there's some laws in some states that prohibit, landlords from even going near the property anyway.
That's so weird.
Yeah, don't be a creep, all right? Leave that to the experts to manage on your behalf.
I think last one, maybe we'll go old properties.
Oh yes, the fear. Well, don't want to buy an old property because it's old. Sorry, that was a bit condescending. No, so I don't want to buy an older property because it's old. I want to buy a new property because it's new and it's going to have less issues. Holy hell! Now, I've done both, so I can talk to both sides of the fence.
All right. Go for it.
I've bought new. I have bought old. The new property has had probably just as many issues as the older existing properties. Dishwashers go regardless of what property it is in. My new build had issues with, roof leaking, little maintenance issues in and around the house itself. And as the old properties have had as well. Either one of those things have all been tax deductions on my income. So I always prefer existing established properties over brand new builds in today's day and age for one main reason is that the quality of builds these days, unless you are with like an extremely high-end luxury home builder, is just not the same as how they built them 20 years ago, right? I would much rather have a property built in the 70s, 80s, and potentially 90s as well over a 2010, 2020 style property. They're just built better. They last longer. And so with that, I wouldn't bother about wanting to just buy brand new because it's new because you're going to have less issues. That is just completely false. It doesn't necessarily work that way. Also, if you are buying brand new, you are most likely paying over market value for a comparable property in the area. Why? Because the builder's got to make money somehow. There's generally a 20-30% markup on everything, and that cost is paid by you as the buyer at the end of the day. So going back to the point earlier where we had about fear of getting ripped off, don't buy brand new builds because you're going to get ripped off. That's just how it works, right? That's another reason why I like established properties, existing properties in established areas, is because you can negotiate very good prices for yourself.
I love the passion.
No, I'm passionate about it because I hear a lot of people, they want to buy brand new. A lot of people want to buy brand new because they get tax deductions. Like, come on, right? You don't invest money to lose money so you can get a tax deduction. Like, what you can get tax deductions from existing builds.
And that's the thing as well. Even if you were to do maintenance, it's going to have a good effect on your tax deduction come that financial year.
Exactly. So no, I am passionate about that because I have bought brand new. My property lost value and significantly not long after I'd bought it.
Whilst you were trying to scale.
Whilst I was trying to build a portfolio, it just held me back. Every single existing property in established areas that I bought has only increased in value. Now, I know that's not always going to be the case, but I've just had such a better experience with existing properties as I have had with new builds. And that is why I will never, ever buy a client a brand new property. And if anyone comes to us and says, hey, can you buy me a brand new property? I'm sorry, we do not do that.
Yeah, I think just maybe the other flip side or the other side of the coin with that is if you're buying a brand new property and working with a buyer's agent, and I do want to voice this, it's important to understand who they are getting paid from, because
who's in whose pocket.
Yeah, exactly, because there's a vested interest with the builder or the developer and that specific
100%.
person. Yeah, but I just think ethically it's one of those things where, yes, if someone wants a brand new property for whatever reason, they have their reasons, that's fine. There's nothing wrong with that. Maybe they want to live in it after a period of time, that's fine. But I think if you're working with someone, just really understand who they are working on the best interest of.
That's right. We've done a buyer's agent podcast on what to look for. That was, I think, the previous episode. Go and check that one out. But I think that covers a lot of fears that first-time property investors have when they are thinking about getting into the market, or maybe at the beginning stages of their journey. So hopefully that's helped you as an investor know that, hey, actually, no, I'm also thinking that that's also a normal fear. Let me do some work to kind of, move through that and mitigate those risks as much as we can. But that's all we've got time for today's episode. Thank you so much, everybody out there, for the support in 2024. Welcome to all the new subscribers that we have onboarded, that we have welcomed into the team, the family, the SPI crew. Thank you for joining. We've got, like I said, lots of property content planned in 2025. But that's all we have time for today. If you need help on your property investing journey, reach out to us, smashpropertyinvesting.com.au. We're on all the socials. You probably already know. There's links down below. You know where to find us. Until next week, thank you so much for watching. I'm Nick V. This is Akira. We'll catch you soon. Bye.